Good evening, guys. You can see time is around 10:45. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty, guys. You can see if you look into a daily time frame analysis, and you can see the market here faced resistance at 53,900 level. But what happened is that the market broke the all-time high, guys. Even this level over here, you can see this is the all-time high. And if you look into a daily time frame analysis, I will show you can see the market clearly broke the all-time high, and the market here formed a triangle pattern over here, and the market showing bearishness over here. So you could have taken short position and traded it all the way towards the downside. But here, what we can see here is that the market broke this pattern over here, the head and shoulders pattern, and gapped up, guys. You can see clearly the market gapped up also, a 400 points in gap up. And if you look into a shorter time frame, see this line is the all-time high line, guys. And you can see the market sentiment being bullish. And what you can see, if the market gapped up at around, if you see a 600 points in gap up, is clearly signifying market sentiment being very bullish. And after this kind of gap up, the market aggressively head towards the upside and showed some kind of retracement here. But what we could have expected is that the market, after this kind of huge bullish candle, price taking, rejecting from 21 moving average, market here failed to make a lower low, guys. Instead, the market here broke towards the upside, clearly indicating some sort of bullishness. So you can expect the market retracing here and selling here, retracing, and further continuation of downside. So what you could have expected is that the market breaking this high over here, guys. Once this high is being broken, you could have easily taken long position, keeping your stop loss just above that candle itself. Or else what you could have taken is to take this swing over here, guys, the low to high of this candle. And if you consider the 0.5 levels being broken towards the upside, you can see this kind of solid bullish candle breaking the VWAP level towards the upside, as well as the 21 moving average towards the upside, and closing above these levels, guys, clearly indicating some sort of bullishness, and market failing to make a lower low here. So what you could have done is to enter long position of this candle itself, keeping your trade stop loss just below that candle and targeting towards the upside. For the first target, what you could have done is to mark this level over here, this swing high is where you could have targeted. Or if you try to plot the fib levels over here, the common point between this to the common point between this, you could have targeted the 1.68 level over here. You can see the market came all the way to this 1.68 level of this swing. And you consider this to be a single swing, guys. Or what you can see, if you consider this to be a retracement, what you can see is to plot the swing low over here, the common point between this to the common point between this. You can see market rejecting from 0.38 level, clearly indicating some sort of bullishness, 0.38 level. And if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, the market failed to reach the 100% move here, but definitely the market here reached the 100% move. But this is the 100% move, guys. But market failed to reject here. Instead, the market rejected from these levels, and this level is of this retracement, guys, the common point between this to the common point between this. This retracement level is the 1.68 level over here, where the market here exited. You could have trialed it all the way. Or what you could have done is that after this swing momentum, you could have plotted the fib 50 levels, and you could have expected the market taking support from fib 50 levels also. So the common point between this to the common point between this, you can see this is the fib 50 level, guys. You could have marked it as the fib 50 level, and you can see what you can expect is that the market here clearly showed some kind of bullish momentum and even broke this structure low, clearly indicating a chalk formation. So, and if you consider this swing momentum over here, the common point between this to the common point between this, you can see the market here rejecting price from 0.68 level over here, or you can consider the golden zone ratio here, This is the 0.68 level where price is rejecting and continuing further selling towards the downside. So what you could have done is that in case of the market sentiment was bearish now guys, the market with after this kind of retracement could have clearly broke this low, but instead the market closed above this and broke structure towards the upside is clearly indicating a chalk formation over here. But for better trade opportunities guys, if you try to plot this swing low to this swing high over here, the common point within this, and if you mark the 0.5 levels of this candle, and you can see in case if the market sentiment would have been bearish, the market would have, after this kind of sell off candle, the market would have retraced here, rejected price from these levels and continue very aggressively towards the downside. But definitely this momentum towards the upside guys, which broke the 9 as well as 200 moving average towards the upside. And if you try to plot the anchor way up level, you can see the market here broke this candle also. So what you could have done is that to enter long position of this candle itself, keeping your stop loss just below that candle itself guys. So I hope you're understanding what I'm saying. And if you try to plot your anchor way up levels of this window also, you can see the market rejecting from these levels and breaking that structure high. So let's try to take this anchor way up levels out. So I hope you're understanding what am I saying to take a one candle of stop loss, and you could have targeted it towards the upside. So the first target was that liquidity over here, or you could have clearly plot the fib extinction levels, the common point within this, to the common point within this, to the common point within this. You could have targeted it all the way to this 1.68 level over here, the 100% move over here, or you could have drawn the 0.5 as well as the 0.6 level over here. You can see clearly the market here came all the way to this 0.5 levels over here and rejected price from this level. So you could have trialed it all the way to this level as well. Or as long as the market is trading above the 21 moving average, here is where the market broke the 21 moving average towards the downside and closed below this level, and this is where you could have exited guys. So you could have trialed it all the way somewhere here, so you could have made a profit of this impulsive momentum. And you can see in this swing structure the market even broke this structure high. This is a clear break of structure, and if you try to plot the order block levels here, the market came and mitigated this order block. So in case if again you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within this, you could have targeted this swing high, or again you could have targeted the 0.5 as well as the 0.6 level. And you can see this is both aligns here guys. The 0.5 level lines here as well. You can see they both are aligning to each other. So you could have targeted it all the way to this levels guys. So taking a long position here, keeping your stop loss just below that candle. And if you consider this swing momentum over here, the common point between this to the common point between this, the market after this break of this candle, you could have considered this swing momentum. Once if this 21 moving average has been broken towards the upside, this is where exactly you could have taken a long position guys. And for a proper confirmation, this candle is where keeping your stop loss just below that candle itself, you could have expected and traded it towards the upside. And if you consider this swing momentum, again the market here retraced over 50 levels over here and continued further bullish. And you can see clearly after this the market here faced some sort of rejection, and you can consider this kind of impulsive momentum here, which was not very impulsive. As you can see, there is no imbalance over here and there was a very balanced move. And if you consider this momentum where the market clearly broke structure towards the downside, the market aggressively sold here but failed to close below this swing lows, but here the market closed guys. This is a clear chalk formation over here, or you can consider a market structure strip. And this momentum candle which actually broke structure towards the downside. So if you consider the swing high to swing low here, the common point between this to the common point between this, you could have marked the optimum trade entry. This is the optimum trade entry zone guys, where you could have expected, and this I have posted you on live trade analysis, the trade which I have captured this guys. Even I have captured the morning trade also, but I haven't posted it because definitely there was not much of learning content in that. You can see the market came all the way to this 4.26 level over here. This I have posted you the live trade guys. You can go and watch this. The momentum where I have captured is keeping your stop loss just above this candle itself and targeting it all the way to this 4.26 level over here. Or I have marked you this fair value gap over here. You can see this fair value gap over here. The market came and mitigated this fair value gap and took support from here. And after this, the market here takes support, and you can see the market trying to move in a sideways. This is an order block level where the market came and mitigated this order block. And after this, the market here showed some kind of bullish momentum but failed to close above this high and showed a pattern formation clearly indicating some sort of bearishness. So once if this level has been broken, you could have taken short position targeting this VWAP level also. So this is not a proper price action, but based upon candlestick formations and pattern, you could have easily taken. But you can see, guys, 1, 2, 3, 4 trade setups where you could have easily taken in Bank Nifty. So I hope you're understanding what I'm saying. This is about my Bank Nifty trade analysis, guys. So let's try to decode once more and analyze how the market behaved. You can see the market after this kind of huge aggressive momentum towards the upside. In case if the market would have reversed now, guys, the market would have further aggressively sold towards the downside. Either the market breaking the 5-minute zone or else the mid of the first candle, or you can see the 9 as well as the 20 moving average in a 1-minute time frame also being broken. But here what happened, since the market sentiment is very bullish, the market rejected price from here and closed above this level, above the VWAP level. And a lot of buyers might have entered seeing this kind of huge bullish candle, keeping their stop loss just below that candle or to midpoint of this candle. But you can see to target all those buyers, the market showed some kind of downward momentum. And if you see, if you try to plot the mid of this downward momentum, guys, the high to low of this candle, you can see once the 0.5 levels has been broken towards the upside, you could have just entered your trade, keeping your stop loss just below that candle itself, and you could have targeted it all the way to 1.68 level of this swing momentum. Or you could have hold it as long as the market is trading above the 9 as well as the 21 moving average. Here is where the market broke. But you can see the market showed some kind of bullish momentum. Again, retraced, rejected price from 21 moving average. Here you can see the 21 moving average, the red color line. Price is rejecting as well as closing above the 0.38 level. You could have just added on to your position also here, keeping your stop loss just below that candle itself for the VWAP level over here and targeting it all the way to 1.68 level. And after this kind of huge bearish candle, the market rejected price from these levels and formed a chalk, changing the market sentiment from being bullish to bearish. So a lot of sellers might have entered the market after seeing this kind of huge bearish momentum. And you can see again the market showed some sort of retracement of this bearish impulsive momentum. Market rejected price from this golden zone ratio and continued further selling, but market failed to make a lower low. And if you consider this downward momentum, the market here was not very aggressive, and you can see there is no fair value gaps or imbalance where the market was selling towards the downside. Instead, the market took support from the day VWAP level and broke towards the upside. And if you consider the retracement levels of this swing over here, which I've already mentioned you, the market breaking the anchor VWAP level towards the upside, price rejecting from 9 as well as 20 and moving average and closing above. You could have entered the trade after seeing this kind of huge impulsive candle, breaking the 9 as well as 20 moving average as well as anchor VWAP levels to upside, keeping a stop loss just below that candle itself. And you can see, guys, after this the momentum towards the upside. And if you try to plot the fib extinction level, this is the 100% move, and this is the 0.5 levels of that between the 100% as well as 1.68 level. And this is how you could have easily taken. And you can see after this also the market, there was no impulsive momentum towards the downside. So you could expect the market to break these liquidity zones, this internal liquidity as well as the sectional liquidity. So here you can see there was a very good order block level with a fair value gap as well as impulsive candle sweeping this low and breaking the structure also. The market came, mitigated this order block. Again, mitigated these fair value caps and showed a huge bullish candle. So you could have just engulfing candle, you could just kept your stop loss below this candle, or you could have entered the position here itself, guys, and you could have targeted it all the way to this 100% move or this swing high over here, or of this swing structure, the 0.5 levels over here. And here we can see the market here taking support from 550 levels and broke structure towards the upside. Again, the market retraced to these levels of this swing momentum. But here, this impulsive momentum towards the upside is not as bullish compared to previous bullish momentum. You can see here the market trying to be very bullish. But you can see this bullish momentum, guys. There is no imbalance, no fair value gaps, no structure, anything, guys. You can see this kind of momentum. And what happened here is that the market here saw some kind of aggressive selling. But here the market failed to make a close below these levels, this swing lows here, but here the market closed. And if you consider the swing structure over here, the market again retraced to optimum trade entry over here. So if you try to plot this common point within this to the common point within this, either you can consider the 50 levels where price is rejecting. You can see this is the 50 levels, guys, where price is rejecting from these levels, And either you could consider that, or you could consider this swing momentum of here where the market rejecting price from the optimum trade entry. And after this, the market, which I have posted you on live trade analysis of this impulsive momentum towards the downside, guys. So this is about my bank nifty trade analysis, guys. And coming to Nifty 50, guys, let's see how the market here behave. So let's look into a daily time frame analysis and see how the market here is behaving in Nifty 50. You can see this kind of huge bullish momentum over here in Nifty 50. And the market here broke the previous swing high also, clearly indicating some sort of bullishness. You can see previous two swings also the market broke, and the market here is heading to this levels over here. There is high chance the market might continue for this buying pressure. So let's look into a on a time frames and see here what you can see. The market in Bank Nifty showed some kind of huge bullish momentum, and the market didn't retrace in Bank Nifty at the 5 minute zone or the mid of the first candle, but definitely in Nifty 50 the market broke this level as well. You can see the market showed a break of structure, clearly indicating market sentiment being bearish, guys. You can see this aggressive momentum with fair value gaps. So what you can consider, if you consider this swing high, guys, the high to low of this candle, you can see the market here showing a fair value gap, as well as this is the optimum trade entry, guys. So you can expect price rejecting from this optimum trade entry zone and heading towards the downside. So you could have either entered short position here, keeping your stop loss just above that order candle itself, previous candle over here, and targeting it towards the downside. But what you can see is that the market here was not able to cross this 21 moving average here, guys. Even though the market found a breakout structure here, the market showed some sort of support here at this 21 moving average. So what we need to consider is that the market breaking the neckline liquidity over here. Once this neckline has been broken, only then we can consider taking short position, or of this retracement, the market breaking the 0.5 levels towards the downside. But here you can see the market failed to even cross this 20 moving average towards the downside on this downward momentum. Instead, the market broke towards the upside, changing the market sentiment initially from being bearish to bullish. And if you consider this swing momentum over here, the last down candle over here, where price moved towards the upside. And if you try to mark the 550 levels, you can see this is the 550 level, guys, where the price taking support at this 550 levels. And if you try to plot the anchor way up level of this swing low here, you can see price is taking support over here. So in case if you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within this, you can see you could have targeted it all the way to 1.68 level, the 100% move. But let's try to see, guys, how you could have easily made. You can see price here trading above the 550 levels. The optimum trade entry zone also acting as some sort of support over here. And if you consider this breakout structure as well, I will show you multiple entries where you could have taken. This is another breakout structure. And if you try to plot this swing low here to this swing high, you can see again price is taking support from the 550 levels over here. This is the 550 level where price is taking support. And if you consider this swing momentum over here, where market failed to make a close below this level with a very aggressive sign towards the downside. So if you consider this swing momentum over here, guys, you can see the market here broke towards the upside. And what you can see is that if you consider this swing low to this swing high over here, you can see the market here taking support from 0.38 level over here. The 0.38 level clearly indicating some sort of bullishness. And if you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within there, you could have targeted the 100% move over here, or the 1.68 level here is. You can see this is where you could have targeted the 1.68 level. So keeping your stop loss just below this candle itself after the market breaking the 9 as well as the 21 moving average, or you could have either entered here and targeting it all the way to this level, or in case if you might have entered here looking at this support levels, taking your position here, guys, keeping your stop loss just below the anchor daily wrap level or the 550 levels, and targeting towards the upside. So in case if you try to plot the fib extinction levels, the last down candle which broke structure towards the upside. So this is the last down candle, guys. So if you try to plot the fib extinction levels, you can see you could have targeted it the 100% move for this being high, or you can see if you consider the midpoint between the 1.68 level as well as the 2.6 level. We try to be perfect, guys. And I hope you're understanding where exactly the market here came. The midpoint between the 1.68 level to the 2.68 level where the market here targeted. So in case if you could have traded here, you could have easily traded it all the way to exact zone over here, guys, where you could have. But definitely I'm showing you to add on to your trades, guys, where you could have taken here also your position, keeping your stop loss just below this candle and trying to plot the anchor VWAP level of this candle. You can see price taking support over here of this anchor VWAP level. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. So this is the 1.68 level. You can see the market reached this 1.68 level. So you could have targeted it all the way to this level, guys, in case if you might have entered your position here. So I hope you're understanding what I'm saying. This one entry, this is another trade entry where you could have taken long position. And you can see there is an fair value gap over here and a 1 minute order block too. So this is a 1 minute order block, and you can see the market clearly broke structure towards the upside, clearly indicating a break of structure and fair value gap. The market came mitigated this fair value gap, and after this kind of huge bullish candle is where you could have taken another long position, keeping your stop loss just below that candle. And for target levels, guys, if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, so you can see you could have targeted it all the way to 2.6 level over here. This is another trade entry where you could have taken and targeted it all the way to this 2.61 level. This was one opportunity, another opportunity where you could have taken. You can see after this the market was overextended towards the upside and clearly formed a chalk over here. And in case if you consider this chalk momentum and if you try to plot the swing high to swing low, you can see the market here retraced to the 50 levels over here. This is the 50 levels where market kind of retraced. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see you could have easily targeted the 1.68 level over here. So this was one trade setup where you could have taken, keeping your stop loss just below over this candle. And in case if you try to plot the anchor VWAP levels of this swing high, you can see rejection of price from these levels, clearly indicating some sort of bearishness, and you could have targeted it all the way to this level over here. I hope you're understanding that's what I'm saying. You should be very keen about trading these guys. And you can see here the market again took support from here and formed a chalk over here, clearly indicating some sort of bullishness. The market came and took support from this 200 moving average as well as the 1.68 level. You can see this is another order block level where market came and mitigated this order block. So there is a very good chance the market might continue further bullish, guys. In case if the market gaps down tomorrow, there is a very good chance the market might go bearish. But in case if the market gap up, there is a very good opportunity the market to continue further bullish momentum. So this is my trade opportunities in Nifty 50, guys. You can see after this kind of support, you could either enter long position here, targeting this swing or that swing also. Where the market clearly formed a chalk here as well. So you can consider a clear chalk formation as well. So the market here showed a good support over here. But in Bank Nifty, the market came and reached all the way to this 200 moving average as well as the daily VWAP level. But the market failed to make a chalk. But in Nifty 50, market chalk formed a chalk. And again, the market mitigated this order block level. So this order block level doesn't hold any value as of now. So that's it about my Nifty 50 trade analysis, guys. So in case if you want to analyze it further, go and watch it once more in a smaller time frame. and very detailed. You should watch it, guys. Only then you'll be able to understand how I usually trade and how I make my targets. And based upon risk to reward ratio is only what I'm gonna trade. So I hope you're understanding, guys. In case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well, guys. And keep supporting my YouTube channel, and it would help me on my YouTube algorithms to grow better. And Instagram is the way to go, guys. So in case if you want to keep in touch with me, you can message me directly. I would be glad to message you there. Thank you, guys.